Have you ever heard about a new tax law or maybe stared at a complex tax form and just wish you had, I don't know, a seasoned guide, someone to navigate that dense jungle of rules and regulations?
Ah,
It can feel less like a system and more like, well, a high-stakes scavenger hunt, right?
absolutely.
Well, today we're embarking on a deep dive into working with the tax law. This isn't just for, tax pros. It's really a foundational look for anyone who wants a clearer lens on our financial systems.
Uh-huh.
Whether you're running a business, investing, or, frankly, just trying to understand your own financial situation better. Our mission today is to give you a shortcut, sort of, to being genuinely well-informed. We're going to trace tax law from its ultimate origins,
Right.
through those crucial interpretive layers,
Mm.
right down to how it's actually applied in real-world planning, and even how it shapes something like the CPA exam. We'll try to uncover not just what the rules are, but really why they matter, and maybe some common pitfalls to look out for. Okay, let's unpack this.
And that idea of shortcut to being well-informed, that's really key, I think. We're not just going to, list definitions.
Right.
We'll be connecting the dots, showing the strategic side of how tax law gets made, how it's interpreted, and importantly, enforced. Understanding the sources and the process behind tax law can turn what often feels like, well, total confusion
Yeah.
into a pretty powerful framework for making smarter financial decisions. It really does empower you with crucial knowledge.
Okay, so to really get a handle on this intricate system, you first have to know where these laws even come from. Like, what's the bedrock?
Uh-huh.
We're starting with the most fundamental layers, the statutory sources. These are the actual laws passed by Congress.
Precisely. So at the very, very top, the ultimate authority is the U.S. Constitution. It gives Congress the power to lay and collect taxes.
Okay.
But for everyday federal tax law, the real operational document is the Internal Revenue Code, the IRC.
YSC, right?
And it's not static. It's evolved through big overhauls, like in 39, 54, and the most recent big one, the Internal Revenue Code of 1986. What's crucial to grasp is that the IRC organizes all federal tax rules logically. It lives in Title 26 of the U.S. Code. So when you hear a professional mention Section 2A or something,
Yeah.
they're pointing directly to a specific spot in this huge document. Now, the journey for these laws, the legislative part, usually kicks off in the House Ways and Means Committee. That's actually a constitutional requirement for revenue bills.
Oh, interesting.
Then it goes to the Senate Finance Committee. If they disagree on stuff, a joint conference committee tries to iron out the differences. But here's a really critical piece. The committee reports that come out during this process.
Committee reports.
Yeah, these aren't just like historical notes. They spell out the intent of Congress. Why did they create this rule? What were they trying to achieve?
Oh.
So if a new law has kind of vague language, these committee reports are often the first place. The IRS, taxpayers, even the courts look to understand the spirit of the law, not just the exact words.
Got it. That makes sense. It prevents maybe unintended loopholes or something.
Exactly, or misinterpretations. It's a crucial distinction.
Okay, so Congress makes the laws,
Mhm.
but who actually translates those broad strokes into practical everyday rules? That feels like a big job.
It is. And that's where our administrative sources come in, mainly the Treasury Department and the IRS. They're the ones filling in the gaps.
Right, the implementers.
Precisely. The Treasury Department issues Treasury regulations. These are meant to interpret and explain the code. And it's really vital to understand their hierarchy. You've got proposed regulations they're put out for comment, but they carry very little legal weight. Relying on them in court, it's like standing on quicksand.
Okay, so be careful with those.
Definitely. Then there are temporary regulations. They offer immediate guidance, often good for about 3 years. But the real heavy hitters are the final regulations.
Final regs.
Yep. They have the full force of law. They're published as Treasury decisions, or KDs. The key takeaway is these aren't just suggestions. Final regulations are like rock-solid ground for your tax planning.
Okay, solid ground. I like that.
And regulations also come in two main flavors, legislative and interpretive. Legislative regulations are where Congress specifically delegates authority to Treasury. These have the full force of law, almost like Congress wrote them itself.
Right.
Interpretive regulations just explain the existing code. Courts can challenge them sometimes, but honestly, they're almost impossible to overturn. Knowing this difference is super important when you're assessing the legal strength of a specific rule.
Okay, legislative versus interpretive. Got it.
Beyond regulations, the IRS issues other guidance too. Revenue rulings are official IRS positions on specific, often routine tax matters. They show how the IRS applies the law to certain facts. They carry less legal weight than regulations, but they are binding on the IRS itself until they're revoked.
Binding on the IRS, okay.
And then you have letter rulings. These are specific responses from the IRS to a taxpayer asking about a proposed transaction. Think of it like a private opinion just for that taxpayer and that situation.
Ah, so very specific.
Very specific. But sometimes, if a letter ruling addresses something broadly applicable, it might eventually become a revenue ruling for everyone. And if you want to peek behind the curtain at IRS thinking, you might look at technical advice memoranda or TAMs. These come up during audits addressing completed transactions. They give you a window into the IRS's enforcement thinking.
Okay, so lots of layers of interpretation even before things get messy.
Exactly.
But inevitably, disagreements happen, right? Even with all these rules and interpretations, that's when we have to turn to the judicial sources, the courts.
Yes, indeed. When a taxpayer and the IRS can't agree, the taxpayer has choices for where to take the fight. There are 3 main trial courts for tax cases. First, the U.S. Tax Court. It's unique because the judges are tax specialists. And here's the big one. You don't need to pay the disputed tax deficiency up front to have your case heard there.
Oh, that's huge.
It really is. It even has a small cases division for disputes under $50,000. It's more informal, but the decisions there aren't precedent-setting and you can't appeal them.
Okay.
Now, contrast that with the U.S. District Court. If you want a jury trial, that's your venue. But, and it's a big but, you must pay the deficiency up front and then sue for a refund.
Pay first, argue later.
Exactly. And the third option is the U.S. Court of Federal Claims. It also requires paying up front, but its appeals go to a specific court, the Federal Circuit Court of Appeals. Sometimes that's a strategic choice based on past rulings in that circuit.
So strategy even in choosing the court.
Definitely. And this is where the legal principle of stare decisis comes in, meaning let the decision stand. Past judicial decisions create precedent for future cases with similar facts.
Right, building on previous cases.
Exactly. From these trial courts, cases can be appealed up to the Circuit Courts of Appeals. There are 11 geographical circuits, plus 1 for D.C. and that federal circuit we mentioned. These appellate courts review if the trial court applied the law correctly. Now, if different circuit courts rule differently on the same important tax issue, or if an issue is just incredibly significant, the U.S. Supreme Court might grant certiorari agree to hear the case to resolve the conflict or clarify the law.
So the Supreme Court is the final stop, but only for certain cases.
Very rarely, yes. And one more crucial point about the tax court, the Golson decision. It means the tax court has to follow the precedent set by the specific Circuit Court of Appeals where the taxpayer lives, if that circuit has already ruled on the issue.
Wait, so the tax court might rule differently on the same issue depending on where the taxpayer is located?
That's exactly right. It creates this interesting situation where geography matters in how the tax court applies the law nationwide. What's really fascinating here is how all these sources, statutory, administrative, judicial, interact and build on each other. It really creates this complex tapestry you mentioned earlier.
Yeah, it really does.
Imagine Congress passes a broad new rule, that's the code, then Treasury issues detailed regulations administrative to explain it. But maybe a taxpayer challenges that interpretation, and a court ruling judicial refines how that regulation works, or maybe even strikes it down in some cases.
It's like a constant conversation between the branches of government filtered through real-world disputes.
That's a great way to put it. It's this ongoing dialogue that creates the dynamic system professionals have to navigate constantly.
That's a fantastic picture of the interplay. And just to quickly round out the sources, you mentioned other sources like tax treaties.
Right, agreements between the U.S. and other countries mainly to avoid double taxation. If there's a conflict between a treaty and the code, generally the one enacted more recently takes precedence. And while they aren't primary legal authority, things like tax periodicals, articles from professional groups, law reviews, journals can be incredibly helpful. They can shorten your research time by offering analysis and pointing you towards the key primary sources much faster.
Makes sense. Good starting points. So knowing where to look is step one. But how do tax professionals actually find what they need, figure out if it's still valid, and, make sense of it all? Let's talk tools and the actual research journey.
Yeah, the process. Well, tax research today relies heavily on some pretty sophisticated commercial services. You've probably heard names like CCH Intelliconnect or Thomson Reuters Checkpoint and Bloomberg Tax. These platforms are incredibly powerful. They bring together primary sources, the code, regs, cases, and secondary sources like expert analysis, commentary, examples, all linked and cross-referenced. It saves a ton of time.
Like a massive searchable library.
Exactly. But beyond the paid services, non-commercial resources are also invaluable. The IRS website, irs.gov, is just a goldmine for official publications, forms, instructions. You can find a lot there.
Okay, good tip.
Now, using any of these tools effectively requires strategy. You need to pick your keywords carefully, maybe use connectors like and or not in your searches to narrow things down, be selective. But the ultimate goal always is to get back to the original source document. Never, ever rely just on someone else's summary.
Right, go to the source.
And here's maybe the golden rule.
Mm.
You must always check for current developments. Tax law changes constantly. What was true last year might be totally wrong today. You have to verify.
That sounds critical. Always be updating.
Absolutely.
So it's not just about having the fancy tools, it's about having a system, almost like being a detective. How do tax pros actually go about this research journey to make sure they're thorough and accurate?
Well, it's generally seen as an iterative, 6-step process. Following these steps helps build confidence that you've covered the bases.
Okay, 6 steps.
First, identifying and refining the problem. Sounds simple, but it means meticulously gathering all the relevant facts about the taxpayer's situation. Every detail can matter.
Step 1, get the facts straight.
Step 2, locate appropriate tax law sources. This often starts with those keyword searches in the commercial databases or maybe directly in the code if you have a good idea where to look.
Okay.
Third, and this is arguably the most critical step, assessing the validity of the tax law sources you found. Not everything carries the same weight, as we've discussed.
Right, checking how strong that source is.
Exactly. Fourth, arriving at a solution, or maybe alternative solutions. And crucially, considering non-tax factors here, is the purely tax-optimal solution actually good for the business or the individual overall?
Good point. Don't let the tax tail wag the dog.
Precisely. Fifth, you have to effectively communicate that solution to the taxpayer, clearly, concisely explaining the reasoning.
Makes sense.
And finally, step 6, because tax laws are always a moving target, you need to be prepared to update the solution if laws or interpretations change later on.
That loop back to staying current.
Always. Now, about assessing validity, step 3, it's really important. The code itself, the law passed by Congress, can have language that's, well, famously dense and hard to fully grasp. Treasury regulations offer interpretation, but remember, proposed regs aren't binding. And here's a really significant recent development. In 2024, the U.S. Supreme Court issued a decision that basically gives courts more authority to draw their own conclusions about ambiguous federal laws.
Oh, wow. So less automatic deference to agencies like the Treasury.
Potentially, yes. It means you can't just assume a regulation is automatically the final word if the underlying law itself is unclear. Courts might look at it more skeptically now.
That's a big shift.
It could be. And for judicial sources, court decisions, their weight depends on factors like the level of the court. Supreme Court trumps circuit court, which trumps trial court. Also, the taxpayer's residence matters because of that Golson rule for the tax court. And whether it's a regular tax court decision dealing with novel issues, which carries more weight, versus a memorandum decision applying established law, this is where a citator becomes absolutely essential.
A citator, what's that?
It's a research tool, usually part of those commercial services, that lets you trace the history of a court case. Has it been appealed? Was it affirmed? Reversed? Criticized by other courts?
So it tells you if the case is still considered good law.
Exactly. I've seen so many instances where someone built an argument on a case, but they hadn't used a citator to check if it had been overturned on appeal. It's, well, a researcher's best friend for verifying reliability.
That sounds indispensable. Can't skip that step.
Definitely not.
Okay, that's a fantastic point about staying current and verifying. And speaking of tools and efficiency, how is something like generative AI impacting this whole research landscape? We hear so much about AI.
Yeah, it's a hot topic. Generative AI certainly has potential for some tasks in tax. It can be useful for running calculations, maybe spotting patterns in data, even drafting initial versions of things like client letters or maybe summaries of cases.
Okay, some drafting help.
Right. But, and this is a really big but, these AI tools are typically not up to date on the very latest tax developments.
The lag problem.
Exactly. Tax law changes fast, sometimes retroactively, and the AI models' training data often lag behind reality. They also tend to struggle with really complex, nuanced fact patterns, especially where you have interacting federal and state rules.
So not ready to replace the human expert just yet.
Not by a long shot. Knowledgeable tax professionals are still absolutely essential to figure out when AI might be helpful, and most importantly, to meticulously review all AI output for accuracy, relevance, and completeness. You just can't trust it blindly.
Makes sense. Use it as a tool, not the final answer.
Precisely. It raises this important question, really. How do we leverage powerful new tech like AI to boost efficiency without sacrificing critical oversight and accuracy? It's a balance the profession is actively figuring out right now.
That's a profound question, and honestly, it applies way beyond just tax, doesn't it?
It really does.
So, okay, all of this foundational knowledge, this rigorous research process we've been talking about, it all ultimately comes together for a very practical, real-world purpose.
Yeah.
Effective tax planning.
Right. The primary goal of tax planning is pretty straightforward. Maximize the taxpayer's after-tax wealth. Keep more of what you earn legally.
Okay.
A secondary but often more immediate objective is simply to reduce or defer the tax you owe in the current year. Push it off if possible. And this is absolutely critical, good tax planning is not just about the tax outcome. You always have to consider non-tax considerations.
Like what?
Like sound business judgment, personal goals, administrative hassle, legal liability. Don't let a purely tax-driven decision lead you into a bad business move or a poor personal choice.
Right, the bigger picture.
Exactly. For instance, maybe forming a certain type of corporation saves some tax, but if it creates way too much paperwork or exposes you to unwanted risks, it might just not be worth it overall.
That makes perfect sense.
So some key components of smart tax planning often involve strategies like legally avoiding or deferring when you recognize income, or trying to convert income from one classification to another, say from high tax ordinary income to lower taxed capital gains. Choosing the right type of business entity, sole proprietorship, partnership, S Corp, C Corp that aligns with your goals is huge. And meticulously preserving formalities, keeping crystal clear records to support your tax positions. And here's where we get to a really crucial distinction. Tax avoidance versus tax evasion. This is fundamental.
Yeah, what's the difference? Sounds important.
It is. Tax avoidance is the legal minimization of your tax liability using legitimate techniques allowed by the law. It is, in fact, the proper objective of all tax planning.
So using the rules legally to your benefit.
Exactly. Things like contributing to your 401k or IRA, taking legitimate business deductions, structuring a transaction to qualify for capital gains treatment. That's all avoidance, perfectly legal and smart.
Okay. And evasion.
Tax evasion is illegal. It involves using subterfuge, deceit, or fraud to hide income, claim deductions you're not entitled to, or just outright lie to the IRS to illegally slash your tax bill.
Got it. Legal versus illegal.
Yeah, and the consequences. They're as vast as the difference between, I don't know, a lightning bug and actual lightning.
Good analogy.
Avoidance is fine. Evasion can lead to huge penalties, interest, and even criminal prosecution. It's just not worth it.
Absolutely.
And one last point on planning. Because tax laws are constantly changing, continuous follow-up is essential. You need to revisit your plans regularly to make sure they're still valid and effective under the current rules.
Right, that theme again, constant change. Okay, for many listening, this might sound like a really fascinating, maybe even challenging career path. So let's briefly touch on how this foundational understanding of tax law connects directly to becoming a CPA.
Sure. The CPA examination actually underwent a significant redesign recently, aiming to better reflect the skills accountants need today.
Oh, right. The new structure.
Yeah. It now has 3 core sections everyone takes: financial accounting and reporting, FAR, auditing and attestation, AUD, and regulation, REG, which covers tax and business law. Then, candidates choose one of 3 discipline sections based on their interests or career path: business analysis and reporting, BAR, information systems and controls, ISC, or tax compliance and planning, TCP.
So more specialization.
A bit, yes. And importantly, the exam's focus has really shifted. It's less about just memorizing facts and rules, and much more about higher-level skills analysis, evaluation, applying knowledge. You see this especially in the task-based simulations they use.
More real-world application.
Exactly. The core knowledge of taxation that we've been discussing is primarily tested in the REG section. That covers ethics, federal tax procedures, business law, and federal taxation for both individuals and entities like corporations and partnerships. There's a heavy emphasis in RIG on applied research, actually using research tools to find answers, and also understanding how data and technology concepts fit into tax preparation and compliance.
Okay, so RAG is the core tax piece.
Right. And if you choose the TCP section as your discipline, you dive even deeper. That covers advanced tax compliance and planning for individuals, including personal financial planning aspects, and also more complex issues for entities and asset sales. The AICPA publishes detailed blueprints outlining exactly what's tested, and they really emphasize these analytical and application skills, not just recall.
Wow, okay. That's a great overview. So we've really journeyed through the statutory, administrative, and judicial sources of tax law, explored the tools and that meticulous research process, delved into strategic tax planning, avoidance versus evasion,
Yeah.
and even peeked into how it all comes together for the CPA exam. It's a vastly interconnected and constantly evolving system, isn't it?
It really is. And if we kind of connect this back to the bigger picture, truly understanding how tax law is structured, how it's interpreted, how it's applied, is absolutely crucial for making informed decisions.
Right.
Whether you're a professional trying to advise clients effectively or you're simply managing your own financial life, this kind of deep dive hopefully empowers you to understand the why behind the what of your tax obligations. It can really turn that feeling of complexity into clarity.
So what does this all mean for you listening? Hopefully you've gained a deeper appreciation for this structured, yet incredibly dynamic world of tax law. You now have a sense, maybe, of the sheer depth of sources involved and the rigorous process tax professionals undertake to navigate it all. So here's maybe a thought to leave you with. Consider the next time you hear about a new tax proposal in the news. Think about how many layers of this intricate system we discussed, legislative, administrative, judicial, it will have to navigate before it truly impacts your wallet. And maybe ask yourself, what kind of critical research would you need to do beyond just the headlines to understand its real-world implications for you?